Hey, Jeff, let's do a hot stocks roundup. There's a lot of stocks out there that kind of go through their moments where they get a lot of attention from investors. I think it's a good opportunity for you and I to go through a few of them, break things down. What's the story? What's driving the stock up or down? Why are investors interested right now? And maybe give our thoughts about them.
Yeah, I think that's a good idea because typically when stocks become talked about a lot, it's for reasons that don't necessarily make them good investments. So I think digging into some of these and seeing what's what is probably a good idea.
All right, let's get to it. I'm Jason Hall. He is Jeff Santoro. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/unscripted. The Motley Fool is going to give you, yeah, that's right. They're going to give you their 10 best stocks to buy right now. Definitely check out that link after the video. All right, Jeff, let's start with Weight Watchers International, ticker WW. As you see, 2023, and this is over the past year, had one heck of a year in 2023 until it didn't. What happened? What happened to the stock? What killed the stock?
I think the obvious reason here is the proliferation of these GLP-1 drugs, commonly known as Ozempic and Mounjaro. As more and more people are taking these, and as the evidence is mounting that they are very beneficial for weight loss, for reducing cravings, for fighting other diseases and treating other symptoms, Weight Watchers is in a position of trying to have to reinvent itself, which it has done over its history. There have been many iterations of Weight Watchers as it has tried to adapt to what consumers want, and I think they're in one of those positions again.
Yeah, no, that's true. Like we can look at just the pandemic as a good example because the Weight Watchers model has been built on two things. The key thing that's always been there for Weight Watchers is their meetings, right? And the idea is that you provide people with support and a plan to help them focus on better eating habits and also actual support of people. Weight Watchers employee runs the meetings, other people that are in the program getting together to discuss their challenges and work on moving forward. Of course, they've done some licensing with products in the past, with food products and that sort of thing that have had varying levels of success. And just like Jeff, just like the wider weight loss industry goes through these fads and these booms and busts. And this is certainly one of the most durable brands in weight loss. But like the industry, the stock has gone all over the place. But more recently, I know there's something that's gotten a lot of people really interested. And that is the fact that they're reinventing themselves. They're moving away from less of the in-person things, doing more virtual meetings. But they're also, if you can't beat them, join them. They're embracing the GLP-1, the massive evidence that shows that these drugs really do work and they can help people achieve exactly the things that Weight Watchers are trying to do. Weight Watchers is getting involved with that as well.
Yeah, you can actually get a prescription for these GLP-1s through Weight Watchers now. They partnered with a company called Sequence, I believe is the name of it. And you can go online, you can apply to receive the drugs. If you get approved, you get them. And I know a couple people that I'm friends with have tried this and with great success. And it actually, I know you said if you can't beat them, join them. And I think to some degree that's true. But if you think about it, it really does fit into the philosophy that Weight Watchers has had all along, which is you can eat all the foods. You just have to eat all the foods in moderation and exercise and be healthy. And that's part of what you're signing up for when you get these GLP-1s through Weight Watchers. It's not simply a prescription. It's a prescription. It's encouragement to eat healthy. And because there's also like muscle loss issues with people who are on these drugs and things like that. So I think it actually does fit into like their mission as a company. This is a move they've had to make, or there's the chance that this was going to put them out of business.
Yeah. All right. I know sometimes we take very clear positions on stocks. This is one that I'm going to take two positions. I'd be interested to hear your thoughts too, just real quickly before we move to our next group of stocks. And that is the stock a buy or sell right now? I think it's interesting. Generally, I'm very much a long-term focused investor. The problem is that if you look at a business like Weight Watchers over history, has been a terrible long-term investment because the industry that it's in is so fad driven and it's so difficult to find something that's durable that generates per share cash flow value and you can grow it over time. I do think because of where the price of the stock is right now, it seems there's probably going to be some sort of a catalyst. Maybe they're going to announce some really good numbers around this partnership. It's been around for 6 or 8 months now. It's not a brand new partnership. Maybe they'll start announcing some numbers and people get really excited about it and the stock will get bid up. I do think for investors that maybe have some experience trading, you actually could make some money trading. I still think as a long-term investment, it's a tough sell for me to buy Weight Watchers. What do you think?
I agree. It's still really early days for these GLP-1s. So how it ends up for investors is really to be determined. You could make the case that if you want exposure to that industry, you could just buy the companies that make the drugs, although you could also make the argument that has been priced into their stock price already. I'm with you. I think in the short term, there's probably some opportunity to be to get in and out and maybe make a little money. Not that I would recommend that necessarily, but I'm with you in terms of staying away from it as a long-term investment.
Okay, let's talk about another stock that's hot right now and is getting a lot of investor interest. This is one that you and I both have covered and followed basically since they went public, and we both have been using the product since before they IPO, and that's Zoom Video Communications.
Yeah, it's wild that the trip that this stock has been on over the last couple of years. And it's funny that had it not been for the pandemic, it would probably largely be an unknown company to most people, but it has become a household name because of the pandemic. Yeah, there you can see right there an incredible rise and fall in the last couple of years here with Zoom. I think
this is the number that really sticks out at me the most. And this is from the debut price, not the IPO price, but the first public price from the stock traded. It's up 9%.
Yep.
It's up 9%. At one point, it was up, I don't know, 800%. And now it's essentially down 90% from the peak.
Yeah. And it's not the same company we all thought it was. I think that's the way investors need to think about it. It is not a high growth company. I don't personally think it ever will be again. It is selling mostly to enterprises, so large businesses, and it's trying to be not just a video chat company, but an all things communication company. And they're selling some hardware devices. They have phones. They sell Zoom rooms in addition to the video conferencing that we're all aware of. There's also, I know they're making some moves into trying to integrate Slack-like qualities into Zoom and try to be like an all-encompassing communication software for enterprises. I guess if some of that really picks up, maybe we see some growth reaccelerate. But I think what's hard for investors is we all need to get the Zoom we knew of during the pandemic out of our heads and think of this as a business, enterprise-focused company that still puts off a ton of cash. They generate cash like it's their job. But I don't know.
It is their job, Jeff.
I don't know that we're going to see the revenue growth come back to where it was a few years ago. So I think that's the challenge in how to think about Zoom as an investment.
Yeah, I want to talk about that for a second here. So this is basically its first year at the beginning of 2020. So its first public year had generated $540 million in revenue. Over the past 4 quarters, generated $4.5 billion in revenue. So if you go from its pre-IPO, from the numbers in its S1 filing, the revenue that it generated, annualized revenue, it's last year before going public, revenue has increased 1,260%, 14-fold. So yeah, that is heavily baked into people's thoughts on the company. But again, we haven't gotten the full numbers yet. 2.4% revenue growth over the past 4 reported quarters. You nailed it. It's all about resetting your expectations for the company and what it can be going forward. I'm one that I was drinking the Kool-Aid very much, the Zoom-aid, so to speak. And I made a statement that I thought the company a couple of years ago, so 2021, I expected that Zoom within 10 to 15 years could reach a $1 trillion valuation because I thought it would become this dominant in the enterprise, not just the enterprise, but also small and mid-sized businesses too. But I thought that this could be just a dominant communications business. And you're right, we have to reset those expectations.
I felt the same way. And a large part of my thesis at the time was that having used Zoom, having used Microsoft Teams, having used Cisco WebEx, having used Skype back in the day, Zoom was, and I think still is, the best functioning option out there, and it's not close. But the biggest problem is that anyone who has Microsoft products on their desktop already has Teams. And Microsoft is not stupid. When they saw what Zoom was doing, they poured a ton of resources into Teams, and it got better. I'd still think it's not as good as Zoom, but it got a lot better. And as soon as it gets good enough that it's functional, why would an enterprise spend a lot more money to get Zoom when they already have Teams? So that's the challenge. And I don't think we were thinking of that back in 2021. Now, listen, I think the valuation right now is interesting. If you think that it can, in the future, reaccelerate that growth, that's the gamble you're taking right now.
Yeah, I think you're right. I'm going to push back a little bit though. That 15.6 times number, that used to be a price to sales ratio for Zoom. Now that's its price to free cash flow. It is, like you said, they make money like it's their job. This business absolutely prints cash, has $6.5 billion in cash, no debt. I think, frankly, even with the growth rates where they are, I think it's a compelling buy right now. I really do, because they have so much cash and it's so profitable. This is clearly not a business that's going to be pushed to the wayside completely. There are lots of companies that love their communications tools and appreciate what they have and value it enough that they're willing to pay the price that generates the high margins that Zoom gets. So I think it's still a really important business and it generates plenty of cash flow. And at these prices, I think it's worth buying, even if management just eventually decides, you know what we're going to do? We're going to start taking this massive cash pile and we're going to start eating ourselves. We're going to start repurchasing shares. They haven't really started doing that. The share count continues to move up. So I think if they would start doing something like that, could be even a compelling way to generate per share value for investors, I'd say it's a buy right now.